All right, the time now is 2:30. Hi, good afternoon, everyone, and welcome to today's enrichment session focusing on effective exam approach for paper strategic business reporting. My name is Joanne, the Manager of Learning Support at ACCA. Together with me is our ACCA expert tutor, Tom Clendon. Welcome, Tom, who will be sharing with you his expertise on the paper SBR in a while. Now, before I hand over to Tom, I'd like to give you a quick cover on the housekeeping item, yeah? If you have any questions during this session, please use the control panel chat box at the bottom of the screen and select to send to all panelists and attendees so that others could see your comments. We will aim to answer your questions during the session. Now, without further ado, I will now pass this session to you, Tom. Thank you.
Let me first of all unmute.
Yep.
And excuse me. Let me start sharing. So first of all, let me introduce myself. Thank you very much, Joanne, for hosting this. And I've got Ryan, I know, in the background as well. So hello, everybody. Let me tell you just a little bit about myself before I get going. I am an ACCA member, which means that many, many years ago, I did these exams. So I know what it's like. I was working. I was in my 20s. Maybe the exams were easier in those days because there were less accounting standards involved. That's for sure. Maybe they were more difficult. I had to do 4 in my finals. It doesn't matter. I'm here to help you. I'm just saying that I've been in your shoes back in the day. I qualified with KPMG, and I have spent most of my professional life working for the training company Kaplan. But you know, in recent times, I've done other things. I lived and worked in Singapore for a number of years, so covered the region, did a lot of lecturing in Malaysia and whatever. And I'm now an online lecturer, and I'm very active on LinkedIn. And I post about SBR on LinkedIn. So if you wanted to connect with me, pick up little things, links I share, but by all means, it's a professional networking. By all means, do so. I will welcome you. I will welcome you. So what are we doing today? Thank you for giving up your time. I want to help you pass the SBR exam in December. And in order to do that, I want to talk to you about the format of the exam very quickly, just to make sure we've got the framework. I think we have to know our enemy. And then I want to talk about some exam technique and approaches to questions. And then I want to try and put those into practice. So there's some examples and exercises, and I've got some polls, and I'm also going to be asking you to use the chat box to engage with me and to give me some reaction as we go through, but I'll give you very clear directions on that. The session is due to last for an hour and a half. What I'll probably try and do is wrap it up a few minutes early so that if there are any general questions and answers whatsoever, I can deal with those. But during the session, what I'll try and do is direct you to specific questions and ask your opinions as we go along. So the format of the exam, I'm really hoping here, this is not going to be anything new to you. The format of the exam does have some overlap with FR because you do see things like impairment, you do see things like cash flows, you do see things like group accounts, provisions coming up. But clearly it's not in an MCQ environment, and clearly it's of a higher level. But I acknowledge the fact that there is an overlap. You need to know your basics. Just like at work, you don't have a choice. Your boss, your client comes in, wants you to do something, you have to do it. It's a 50% pass rate, for which I'm very grateful. So you can make mistakes. There's lots of opportunities to gain marks, and it doesn't matter if you get everything 100% correct. I think of the exam as a 3-hour exam. I know there's a 15-minute buffer there, which they call reading time, but you don't have to read up front. And in fact, that's something I'll be talking about very, very directly. Some of you are doing computer-based. I think most of you are doing paper-based. So I'm not going to bang on about the computer-based exam, but if you are doing the computer-based exam, you know it, and you need to prepare for it by making sure that you use the resources on ACCA online. All right, so go and make sure you're very, very comfortable with the mechanism there. That's really important if you're doing the computer-based. I'm assuming most of you are doing the international variant, but for the purposes of this session, it doesn't really make a difference. In the 4 questions in the exam, section A, section B, 50-50. Question 1, it's not P2. And hopefully, most of you don't even know what P2 is. But what we do have is group accounts being tested with explanations, right? So it's short calculations and short explanations. It is not a big number crunching question. If you're revising for the December exam or the SBR exam, don't think that the right way to do it is to do big numbers. It's not. It's to be writing and explaining about individual calculations. Question 2 is on ethics. It's a very stylized question, and I don't want you to be writing the 5 pillars. What the examiner wants from you is an application of your knowledge. You've got to know the 5 pillars, recognize them, and immediately apply them. I mean, in some ways, it's not really an ethics question. It's an accounting question, because ethics has to be examined in context. There has to be something you have to be upset about in terms of misconduct, in terms of mistakes. Section B contains a lot of accounting standards. The paper contains a lot of accounting standards. The paper contains a lot of surprises. And actually, one of the things that I'm hopefully going to do to you today is to surprise you. And those surprises may lead you to validate that actually you do get the trick, you are comfortable with it. Or those surprises may result in you thinking, oh, okay, better make a note of that. I'm going to have to go away afterwards and research that, because Tom said something there and didn't really get it, and I need to just go and make sure that I understand that particular standard. So there will be lots of surprises in this session. Running through the paper as a theme throughout the exam are various issues. Framework, the conceptual framework, so important. And the idea of being real life, that you're talking to someone about the accounts and they're a stakeholder, they're a shareholder, and what do they want to know? So there's an angle to things sometimes. But I've not asked you to give up your afternoon just to talk about the format of the exam. I want to get into things and I want to be fairly practical. So I'm moving on. This is what we're going to be looking at, and let's have a look at it. I love this slide. I love this image. Sometimes weaker students memorize something, remember a question that they've answered before, go into the exam and think it's a good idea to try and repeat what they've memorized, or try and repeat the answer that they gave. What is going on in this picture? Somebody is trying to get a jigsaw piece called a question and trying to make it fit the answer. It's the wrong way round. Don't do this. Look at the question and make sure that your answer fits the question. Read the question, understand the question, and take your knowledge to come up with a unique answer. I'm local. Where I live is where I went to school. I've got family all around me. I'm very lucky, very relatively unusual in the UK. So my nephew, my older sister's son, lives around the corner from me, and he's got kids. So they're young, and they're my great nephews. And Sebi, who is 3, lovely little lad, and he's learning to talk, and I'm engaging with him. And the other week I said to him, how old are you? I mean, I know how old he is. I'm having a conversation with him, but I knew that he just had a birthday. I said, how old are you? And he said, my name is Sebi. Now, what he said was true. His name is Sebi. But I gave him no marks. I failed him in that exam because you've got to answer the question. You know that, I know that. But in order to answer the question, you first of all got to RTR and you've got to RTQ. RTR is to read the requirement. The first thing you do in the exam is you read the requirement, and you also read then you read the question. And there's a peculiar way, I think, that it's good for you to read an SBR exam question, and I'm about to show you that. This is a past examination question. Now, we're not going to do it. We're not going to work it, but it's pretty scary that you've got a 30-mark compulsory question 1. It's massive. And you've got a massive amount of information to read. So how would I go about reading this? First time, I'm looking at the left. I'm looking at that screen. Draft an explanatory note addressing how the functional currency of crotchet. Okay, functional currency of crotchet. B, part 1. How does crotchet customers' contracts get accounted for in the group accounts of Hummings? B, part 2. How do we calculate goodwill of crotchet? How would it be in the group accounts? Explain and calculate impairment. And oh my God, and that's all for 6 marks? Part C, quaver. How should quaver be accounted for? And part D, calculate a discussion of bonds, including impairment losses. So there are 4 separate things I'm being asked to do. Functional currency in part A, something to do with customers' contracts and goodwill for crotchet in B, something to do with quaver in C, and a calculation to do with bonds, yeah, in part D. Now look at the right-hand side. Okay, look, let me jump. Look at the right-hand side. The requirement of part A, yeah, make sure you read the background. But look at the way the question is emboldened. Look at the way the question is written. Trust me on this. Part A is for 5 marks. In order to answer part A, you're just needing to read the information about the functional currency. In order to answer the story of part B with crotchet, you just need to read the bit in green. You get the pattern. Part C is quaver. You can see there the information about quaver. Lee, I'll come back to your point in a minute. Good question. Yeah? And in order, don't read the question. Now, that's a really bizarre thing for a tutor to say. What I'm saying is, don't read the whole question. You're time pressured in this exam. And when you realize that part A relates to A, that B relates to B, that C relates to C, and D relates to the bit at the bottom, you don't need to read about that impairment of bonds. You don't need to read about the acquisition of Quaver. You don't need to read about the calculation of the goodwill of Crotchet in order to sort out the functional currency that you've got to do in part A. Don't get bogged down in reading all of the information in the question. Skim it, skim it. Practice this, please. The next time you do a past SBR exam question, pause, look at the requirement and match the requirement with the information in the question, and you'll see that you can do that correlation. If I was doing this question in the exam, I wouldn't be reading about the impairment of bonds, and I wouldn't be thinking about part D until I'd done part A and B and C. My head gets too full. It's a small point, but I think it is very time saving when you realize the trick, when you realize the way the questions are written. So realistically, this is not a 30-mark question. It's 4 separate questions. It's 4 separate questions. I'm hoping out there that Lee is not the only one who is a keyboard warrior. So I'm hoping that we have the opportunity for me to understand where you're coming from through the group chat. So hopefully you've got the group chat open. Hopefully you've got access to a keyboard, and hopefully in the next few minutes, you'll be able to engage with me in terms of understanding, when you're reading the question, why you're given certain information. Management have decided to sell an item of PPE. You've got to be Sherlock Holmes. You've got to be a detective. Why are you being told that piece of information? Owen, I'll come back and answer that question in a minute. And the answer to that question is, I understand from Joanne that these things will be made available. So I'm asking everybody a particular question, and I'd like your answer in the group chat. I'd like your answer in the group chat. Why would the examiner in an exam question tell you that there is a decision to be made, that management have decided to sell an item of PPE? So the PPE is not yet sold, correct? That is right. Oh, yes, thank you, Yu Ming. Yes, thank you, Oscar. Thank you, Xu. Thank you. Yeah, thank you, Jason. Yeah, exactly. It's IFRS 5. It's held for sale, isn't it? Yeah. So the question will often not directly tell you. I think when you're at FR, it's like, can you, you know, I'm going to ask you a question on this and you need to tell me what it's on. One of the skills in SBR is that we have the problem with identifying issues. So held for sale. So if management have decided to sell an item of PPE, then we are going to have to be discussing in our answer whether or not that is to be categorized as held for sale. So I'm going to talk at you now for 1 minute. If an asset is held for sale, it's because management have an intention of selling the asset. They've made a commitment to sell the asset. It's in a suitable condition to sell the asset. They're offering it for sale at a reasonable price. It's available immediately. And with all of these conditions in place, there is a probability that this asset is going to be sold within 12 months. And therefore, that asset is categorized as held for sale, which means it is presented as a current asset because it's not going to be there next year. That is a relevant thing to do. That is a predictive thing to do. That is a useful thing to do. Do you see what I did there? The reason you present a held for sale PPE as a current asset is because it's predictive, relevant, useful. I've tied it back to the framework. You're principally going to recover the asset from selling it. So if appropriate, you write it down to the fair value less cost to sell. Yeah? Yeah? Now, hopefully you understood that. Hopefully you were kind of, yeah, I know what he's talking about there. If not, go back and have a look at IFRS 5. You've got to be on it. Got to be on it. Keyboard warriors. Why are you told that a company cares about the environment? Why? Oscar says, yes, correct. Yeah. Z says, yes, correct. Yes. Love it. C, love it. Linny, sub it. Love it. Yeah. Fantastic. Yu Jia Ming, thank you. Yeah. Provision, IAS 37. Although I'm glad most of you are writing provision, because let's face it, you're not going to be getting marks for writing ISA 37. I don't care about the number of the accounting standard. No marks for the number of the accounting standard. What I care about is that you identify the issue, you understand the issue, you can apply the issue. It's all about whether or not we can make a provision. Now, in order to make a provision under ISA 37, there are 3 conditions that have to be met. Present obligation, legal or constructive, arising from a past event, that will result in a probable outflow, number 2, and number 3, can be measured reliably. The inference is that this is a constructive obligation. The inference is that the green credentials is part of what is raising the valid expectation. And as soon as you've done the damage, as soon as you have put the oil rig up, that's the past event which creates the present obligation to decommission the asset. And it's that decommissioning, is that clearing up of the environment, that won't be spent for 10 years. That money won't be spent for 10 years. So what you'll have to do is you'll have to, recognize that liability in full, but because it's payable in the future, you'll discount it in today's monetary terms. You capitalize it as part of the cost of the asset. And then subsequently, because you've got an asset and a liability, you're having to depreciate the extra asset and you're having to unwind the discount. Well done. Yeah, well done. One more. The company has guaranteed a loan taken out by the director. So it's not the company that's borrowed the money, or lots of different, financial instruments are coming up. Oh, well done, Lee. Lee said financial instruments and related parties. I say 24 is related parties, isn't it? Yeah. So some people are saying financial instruments. Some people are saying related party transactions. And I think there's a third. Financial instruments, yeah. Say Bungo, absolutely. Helen, yeah, spot on. Vivian, I like it. Oh, employee benefit, that's interesting. Yeah, I could come back and talk about that in a second very briefly. Oh, thank you, Yu Ji Ming. Thank you. Yeah, contingent liability. So, how many marks could this be worth? 3, 4? it's unusual that something is worth lots of marks. So the company has guaranteed a loan to a director. This is my sequence of thought process. If you have any transaction with a director, it's a related party transaction. The director is automatically a related party because they either control or they influence the company. So in fact, it's not only directors, it's key management. It's not only key management, it's their close family members are all related parties. The fact that the transaction involves no money, the fact that the transaction involves no consideration is irrelevant because there is no debit or credit to the company giving a guarantee. But it's still a transaction. So I think there's maybe 1 or 2 marks there for identifying it's a related party transaction and explaining, therefore, there will be a disclosure in the notes to the accounts, even though there's no money changing hands. The second thing to say is that there's a contingent liability because the company's given a guarantee. So under ISA 37, it's going to have to make a judgment. So the director has borrowed 100 million. The director's borrowed 100 million. Now, I'm going to assume that the director is unlikely to default on that loan. Maybe there's only a 5% chance they're going to default on that loan. If it was probable that they were going to default on the loan, I would have to make a provision. But you only make a provision when it's probable. So therefore, if it's only a 5% chance they're going to default on that 100 million loan, I would say there is a disclosure to be made in the notes to the accounts because this is a contingent liability, i.e. it's possible the company could have to honor the guarantee. I think we're probably 3 marks in, a couple of marks for the related party, contingent liability. Now, it was interesting because quite a few of you came up with effectively a financial instrument as your first reaction, which I think is the hardest one. Because under IFRS 9, such a guarantee is a financial instrument. And the recognition and measurement criteria are very different in IFRS 9. It says, okay, we've given this guarantee, it's a financial instrument, it's a liability, and initial recognition is at fair value. So if there's a 5% chance that we're going to have to pay out 100 million, the fair value of that level 3, the fair value of that could be measured on an expected value basis. So you've got a 5 million cost. You've got a 5 million cost. You've got a 5 million liability. So you're debiting and crediting by the 5, which is the higher of 0 from ISA 37 and 5. And there's a couple of marks there. So I can very easily see this could be a 5-mark exercise. A couple of marks on related parties. Yeah, 1 mark on contingent liabilities and a couple of marks for identifying its financial instrument and explaining how it's then dealt with. Well done. Yeah, I hope that was useful. I hope that was useful. I think it was Lee. Oh, by the way, yeah, maybe, just maybe, there is a benefit here. You'd certainly be disclosing the fact that the director did it. Whether or not there is a taxable benefit here, I'm not sure. That's a national taxation issue. I think there may also be a slight ethical issue here. I'm not sure that it's in the best interest of the shareholders that the company guarantees a personal loan of the director. So there are lots of little potential angles that you could talk about there. Okay. I think it was Lee who asked the question very at the top of the session. I mean, spot on, Lee. How do we earn a mark? How much do we have to write for 1 mark? And that's a very direct question. And I'm gonna try and directly answer that question. I want you, when you're doing exam questions, when you're in the exam, to think like a marker. And you can only think like a marker if you've read the marking guides and you realize that the marking guides are basically saying 1 mark per valid point. 1 mark per valid point. Now, to me, that is very significant because I think it affects the way that you write. It should affect the way that you write. You can often pick up 1 mark by making maybe 2 sentences. If you make a valid point, yeah, in 2 sentences, a mini paragraph, leave a space and move on. So that you're tailoring the length of your answer, you're tailoring the amount of time. You've only got 1.8 minutes to earn a mark. Yeah, because I think of it as a 3-hour exam. I know there's 15 minutes, that's a bit of buffer. And so you tailor the length of your answer. And so if an answer is worth 5 marks, you should be ideally thinking that you've got to effectively say 5 things. And typically, you can start with a definition. You can end with a conclusion. And in the middle, you've got to play with the information given in the question. Now, when I talk about softening a definition, I don't want, you'll see what I mean in a minute. You'll see what I mean in a minute. So the facts are given in the question, and you've got to make sure that in the middle of the question, you pull out the fact and you pull out the scenario. You relate it to the scenario. Let's see. Yeah, create your mini paragraphs. Create your mini paragraphs. Right. In a minute, there's going to be a poll. Yeah, in a minute, there's going to be a poll. And I'm always a bit scared when there's a poll because it's a technical issue here, and I've got support, I hope, here, because as I sort of flip around here, oh, can I see where the poll is? Let me have a look. But I'm giving you notice, ladies and gentlemen, that in a minute there is going to be a poll. Now, we've got a little silly 3-mark question here as to Fido has a machine. That machine is damaged. There's been a fire. Yeah, there's been a fire. And that machine is damaged. And they want advice. They want advice on how to account for this. 3 marks. So this is a fairly little light exercise. Now, what I'd like you to do is to read this slide. So I'm just going to be quiet for a minute. So the question is, Fido has a machine that is damaged and wants advice on how to account for this. And I'm saying it's a 3-marker. And the answer says, there are various indicators of impairment. Some are external, market values declined. Some are internal, asset is idle. asset is impaired when the carrying value exceeds the recoverable amount. The recoverable amount is a higher of this. The value in use is this. And then there's even talk about impairment being a deductible temporary difference giving rise to a deferred tax asset. Wow. Right, I need a poll. So I need Ryan, I think, here to help me get to where we are. So Ryan, are you in a position to help me? Because I can't see
Yes,
at this
Tom,
moment
I'll
in
help you to
time.
launch the pool right now.
Thank you very much, Ryan.
Welcome.
So everybody, Ryan's going to give you a poll, and I want you to answer that poll. How many marks do you think this answer is worth? You're a marker. How many marks? And it's not a difficult question. You don't need a calculator. I'm not tracking your answers. There's no right or wrong. Well, I will have a view. But I'm interested in your view. Please vote. Please vote. How many marks would you give that answer? Strictly speaking, it can't be 4 because I've said it's out of 3, but never mind. How many votes, how many marks would you give this on? Please vote. Okay, I think we've probably got another 10 seconds or so for you to vote. Many people have voted, but there are still some of you out there who seem to be indecisive. Remember, there was quite a long answer there. And out of 3 marks, how many marks do you think it's worth? Let's have a countdown before we close the poll. 5, 4, 3, 2, 1. And Ryan, can you tell me the results of the poll? Interesting. I'm looking at the results of the poll. Some of you are really hard. Some of you are giving it 0. 7% of you are giving it 0. I think that's too harsh. I do think that's too harsh. Mind you, 8% of you are giving it 4. That's interesting because actually the requirement of the question was only for 3. So you can't give it 4 marks. 21% of you have said this is a perfect answer. Quite a few of you have said I'm going to give it 3 out of 3. So it's the perfect answer. That's what some of you have said. But the majority of you are kind of in the middle. In fact, the most popular answer is 1. I think I'll give this 1. I agree with the popular answer. I think this is worth 1. And I think the reason it's worth 1 is there's too much showing off. I think the reason it's worth 1 is Fido isn't mentioned. I think the reason it's worth 1 is it's stiff. There's nothing technically wrong in this answer, but it doesn't feel like the question has been answered. Thank you, Ryan, for that first poll. Thank you, everybody, for participating in that poll. And you've now voted. Well done. Thank you. And there's another poll that's about to happen. And it's the same question we're asking. It's the same 3-mark question we're asking. Fido has a machine that is damaged and wants advice as to how to account for it. And this time the answer is shorter. This time the answer is shorter. Now I'm just going to give you a moment to read this question. And I want you to be thinking to yourself, how many marks is this worth? Because in a minute, Ryan is going to kindly give us another poll. Okay. So this is an answer to the question, and the maximum number of marks is 3. And Ryan, I'm wondering if you could effectively, come up with that poll so that we can ask people to vote on how many marks we think that should be ordered. And I can see people voting away. Fantastic. Yeah. I'm very pleased to see that at the moment nobody's given it 4 because it's only worth 3. And I'm very pleased at the moment that nobody's giving it 0. Okay, and I'm just going to count down from 5. There's a few people left who haven't voted. 5. Poll's about to close. 5, 4. 5, 4, 3, 2. Wow, thank you for your participation. That's really good. Thank you very much indeed. Now, maybe I should be like Donald Trump and ask for a recount. I'm not going to ask for a recount. I'll take the result. For me, the result is very, very clear. The majority of you, 2/3 of you, are saying it's worth 3 marks. And I think it's also worth 3 marks. You can argue maybe it should be, I mean, the previous example I thought was only worth 1. You could argue maybe it was worth 2. But in terms of why I think this is worth 3 marks, is I want you to look again at this question, because it starts by using the company's name, Fido. It says that the damage is an indicator of impairment, triggers the review. It relates it to the answer. It's written in 3 blocks, so it's challenging me each time. Do I want to give it a mark? It's relatable. So what the person who's done who's written this answer is step back, and they've paused, and they've planned, and they've written. And that last paragraph talks about the impairment loss in a slightly colloquial way, rather than the first answer was very, how can I put it? The first answer was very stiff. The first answer, everything written on the first slide was technically correct. But when you are a professional and you're dealing with a client, the client doesn't want you to be Googled. They can look up the definition in Google. It's about how you apply it. Do you understand it? So thank you very much. There's a question come in from Madeline. May I know, are we allowed to short form when answering questions, i.e. FV for fair value? If you're in the middle of a number crunching question, absolutely. If you're in the middle of a number crunching question and you're calculating goodwill, please make sure that you say what your numbers relate to. But and you can do so using well-known abbreviations. If you're writing to a client, if you're presenting to someone else, they won't necessarily know what FV stands for. So I would try not to use text speak, not to use too many abbreviations. If it's a long answer and you're going to use that word fair value a number of times, just write out fair value, then put in brackets FV, and then thereafter you can use fair value. Don't have dashes. Yeah, try and write in proper sentences. Yeah, Lee, that's fine. Yeah, I mean, it's better to say it's well, explaining, isn't it? You're explaining something. If someone's asking you to explain something, Lee, to say value in use, you and I know what we're talking about, but it doesn't really explain what that means. This answer is trying to explain. Yeah, that's what you're wanting to do, not just repeat the definition. So it's about explaining. And the value in use is the present value of the future cash flow, is an estimate of the future cash flows that have been discounted back into today's monetary terms. It's that sort of thing that you've got to be able to articulate. What do you read when you go to bed? Maybe you're just tired and you just crash out. Maybe you like reading literature, religious texts, magazines, whatever. Maybe I read examiners' reports. This is a quote. I don't think it needs any explanation or clarification. I have tried to give life and breadth to that quote. Examiners' reports. If you have never read an examiner's report, well, I'm not going to say shame on you. I'm not going to scold you. I'm just going to say you're missing out. You're missing out. If you haven't read an examiner's report, take that. Take that. The takeaway from today is an inspiration to go and read an examiner's report. Because the examiner has marked hundreds of scripts. He knows the mistakes people are making. He wants you to pass, believe it or not. And he writes to you a letter, a report, a letter to you. Give him the courtesy of reading it. Sir, do we still need to list down the standard requirements in our first paragraph like the BPP answer? Soften it. Soften it. Don't be Google. Don't repeat word for word the definition. Bring in the name of the company. Bring in the situation. Refer to the particular asset. Fido's machine was damaged. This causes us to do an impairment review. Don't write an asset is impaired when the carrying value. Don't be Google. Don't be Google. Start application straight away. Soften it straight away. All right. That's my advice. Let's do another one of these exercises. Oh, yes. Now, this is from the same exam. And this is I'm not going to call it a horrible question. It's wrong. But this is an 8-mark question. And it is to discuss why the disclosure of sustainable information has become an important and influential consideration for investors. 8 marks. The current developments in sustainability reporting show there's a global trend towards extensive and more meaningful narrative reporting. Improvements in the quality and scope of reporting are driven by regulatory demands, certain stock exchanges require it, and market demands for transparency. Sustainable investing describes an approach to an investment where environmental, social, governance factors, in combination with financial considerations, guide the selection and management of investments. 8 marks. Let me tell you, sadly, that a substantial minority of people wrote nothing. Nothing. Yeah? And therefore, a substantial minority of people were being marked out of 92. And if you write nothing, it's so easy for the marker. It's so easy for the examiner because they give you 0. But every time you mark a script where you're giving 0 out of 8, a little part of me dies. Because I'm wanting to reach into the paper and say, God, come on, say something. Because if you say something, even if it's not that erudite, even if it's not that insightful, even if it's not that great, if you say something, at least I might be generous. But if you write nothing, you give me no choice other than to give you no marks. This is the examiner's answer. he's written 5 paragraphs, he's written 300 or 400 words, he's written some quite long words in there as well. He's talked about all sorts of things. There is increasing interest in investors in understanding how businesses are developing environmental and social governance goals. Maybe you've read this answer, I've read it. And clearly it's the right thing to do to read the answer. But let me tell you, nobody, but no student in the exam came up with this answer. No one did. This is the examiner's answer. I don't look the same as you. I've got grayer hair than you. Maybe I'm a bit taller than you. Maybe I'm a bit heavier than you. We're all people, but we're all different. And it's not that that's good or bad. It's just the way it is. This is the examiner. If you were looking at a photograph of the examiner, he would be different from you. And it's not. So as an expert marker, how do you come up with an answer? How do you mark a student script when a student script is so different? That's the marking guide. Oh my God, that's very, how can I put it, very light. That's very giving the marker discretion. That's the question again. That's the question. And I'm about to show you an answer. And I'm thinking, I would like to think that, you know, you're going to participate again in a poll, which is going to engage you to think about how the marking is working. Discuss the disclosures of sustainable information. Why the disclosures of sustainable has become an important and influential factor for investors. So this is the answer that I want you to mark in a minute. So there'll be another poll in a minute. All right. Now, I'm not saying this answer is the perfect answer. In fact, I'm asking you to come up with a judgment in a numerical sense to how many marks you think it might be worth. Some have the ethical values. This is they are charities or institutions, or they've chosen to adopt those values. Life is not all about money. Okay, first point being made there. The disclosures made by companies are voluntary. So they're doing for a reason, to meet the information needs of users, to reduce. It's better if the disclosure was given in line with the international global reporting requirements. This would enhance the cash flow statement is a useful place for investors to look at because cash is necessary for going concern and therefore sustainability. Investors want dividends. Investors are interested in the sustainability of the business because if the business has no future, then it will not get a return on investment. It is for this reason that some investors have sold their holdings in oil companies. Now, I'm going to ask you in a poll in a minute how many marks you would give for this answer if you were a marker. And let me tell you that there are some marks that I think you should award. It's not 0. And let me also tell you, it's not 8 either. All right, so have a look at that. Have a think about that. Yeah, this is the answer that is I'm sharing with you. I'm offering it up. It's not my answer. It's not the examiner's answer. Every time you pick up, it's a different answer. Anyway, Ryan, if you're there, are we in a position to invite our delegates to think about this question? Hopefully
Tom,
Ryan is there.
Do you want me to launch the polling now?
Yes, please. That would be a
sure.
good idea. Yeah. So remember, it's out of 8. And I don't think it's 0. I wouldn't give it 0, and I wouldn't give it 8. So would you give it 1, 2, 3, 4, 5? How many marks would you give this? The poll is open. Come on. Come on. We can vote. You can vote. I can vote. And, you know, ACCA, with their marking team, go through this exact process of standardizing the scripts. And good. Yeah, most of you have voted. I'm going to give it a countdown of 5 before I just finally close it. Most of you have voted. Still maybe 1 or 2 out there. 5, 4, 3, 2, 1. Oh, brilliant. Fantastic. Over 90% of you voted. Brilliant. Love it. Love it. Great. So I'm looking at some results here. What am I looking at? A few of you thought it was only worth 1 mark. Oh, you are harsh. You are really harsh. It's worth more than 1 mark. Trust me on that. A few of you gave it 5, which I think is generous. And most of you are bunching around 3. So some of you think it's worth 2, some of you think it's worth 4, some of you think it's worth 3. And, you know, 3 comes out as the most popular answer. Yeah, 3 does come out as the most popular answer. And yeah, that's great. Let me show you, let me begin to reveal to you what I think on this particular case. So yeah, so thank you for that. So it's somewhere between 2 and 4. Somewhere between 2 and 4. We're all, the vast majority have seemed to agree. So let's go for this process. Let's go for this process. First things first, I don't care about the spelling mistakes. There were spelling mistakes. There were spelling mistakes. Doesn't matter. I can still read it. The investors have ethical values. Some investors have ethical. That is a valid point. Now, strictly speaking, that is not in the marking guide. The marking guide and the model answer doesn't specifically say about religious institutions having ethical values. But it's a valid point, and in my judgment, it is worth a mark. And that is what markers are doing. They're making a judgment. Disclosures are voluntary. The reason they do that is to reduce risk. They're trying to meet the information needs of users. Mentioning the word risk, mentioning the fact that it's voluntary, they are trying to reach. I think that is also worth a mark. And that second paragraph is also, I think, worth a mark, another mark, because there's a reference to the global reporting guidelines, and there's a reference to the fact that if you're making a disclosure, if you comply with those guidelines, you're somehow enhancing comparability. So I feel comfortable so far with giving 3 marks for that. Now, on the top right hand of the slide is a SEBI answer. I agree. The cash flow is a statement that's a useful place for investors to look for because cash is necessary for going concern. Investors want dividends. To me, that doesn't cut it. To me, that isn't really what it's about. So I'm not going to give that a mark. Yeah, I don't see that sentence really being of any significance. And the last paragraph, I think, is important. And maybe in an alternative universe, it would have been better actually maybe if we'd started with that paragraph. Why are investors interested in sustainability? Because actually they want money, and if they're investing in a business that isn't going to exist in 3 years' time, 5 years' time, 10 years' time, then it shouldn't be there. So the question is, should we answer in bullet points? Actually, you shouldn't be answering in bullet points. I should be editing that slide to remove the bullet points. Sorry, there was a default on the slide for bullet points. Absolutely. You'll notice I've written in sentences. So the first letter, and you notice the answer has broken it down. Yeah. So we shouldn't be answering in bullet points. So I should edit that slide to remove the dot. Yes, Zingsa says, are there marks if we kind of quote the 6 capitals? Yeah, because yes, I would give a mark for somebody who talked about integrated reporting, and to talk about how the voluntary disclosures about sustainability can be made through the medium of integrated reporting. I love it. Yeah, I love it. I would be interested in seeing a couple of sentences around integrated reporting and how that's an important vehicle. Why is the cash flow statement wrong? Why is the cash flow statement wrong? Asks Kam K Meng. When I asked Sebi, how old are you? And his answer is, my name is Sebi. That's the wrong answer. It's factually correct, but it's not addressing the issue. The issue is about the disclosure of sustainable information and why that is important to investors. So it's not about cash flow, it's not about dividends. The statement said is technically correct, but you've got to answer the question. Yeah? Believe, guys, ladies, believe. If you can write something, some of my students get disheartened because they look at the examiner's answer and they say, I can't do that. I can't produce that amount of volume. I can't produce that amount of technical information. I give up. I'll write nothing. And I have to reach out to them and say, no, you've got to write something. Come on, give me your best shot. Write something, and then we can play with it. The disclosure is referring to notes to the accounts. Yeah, but I think you can take that disclosure in a wider sense. I don't think you just have to narrow it down to say the notes to the accounts, because it's about disclosing information which is not required by a standard. Sustainable information is not, there isn't a particular accounting standard called disclosure of sustainable information. So we don't have that firm regulatory issue. What we have, and it was mentioned in the background, was market demanding it, customers, investors, stakeholders demanding it. We can do better. Oil companies can do better. Plastic. Yeah, we care about plastic. Yeah, we care about carbon emissions. We care about global warming. And if we want our institutions to improve, then we've got to encourage them to report and allocate capital on that basis. Correct. Oh, I love that point. So governments in putting bids together, one of the criteria for some governments awarding some contracts will be, do they pay a minimum wage? Have they signed up for certain United Nations employment rights or sustainability goals, so that the government are not seen to be spending money with dirty, unethical employers? And that therefore creates a need for companies to get their act together to make disclosures. So this is a very valid point. This is a very valid issue. So, this has been asked in the past. This is a past exam question. And so I'm not saying this question will come up again, but the topic, and there's some good articles on the ACCA Global website relating to these issues. And it's not about debit and credit, and it's not about right and wrong. It's about try and get some marks on a fairly sort of waffly area. Good. Thank you for your participation. Thank you for that. I do appreciate it. In the exam, if you had 4 hours, 5 hours, 6 hours, if you had 6 hours to do the exam, would you pass? Yeah, if you could do the exam and on the day you had the sort of woo power of the matrix, and you could slow down time, and you could sort of make it a 6-hour exam for you, would you pass? I hope that most of you would get to a situation that you've crammed yourself with enough knowledge, because you only have to get 50%. That if you can get to that Zen moment where you think, I know enough to pass, I've got the information to pass, and what I'm struggling with is time, then the focus of your revision almost, or the focus of your journey, because that's not the case when you start tuition. When you start tuition, it's like torture. Don't you like taking exams? At the beginning of the journey, when you're doing tuition, it's like, even if you have 24 hours, you just don't know enough. If you don't know pensions, you don't know pensions. It's just one of those issues. But as you begin to study, as you begin to learn, actually, time does become increasingly a factor, because you have so much knowledge and you need to get it down on the paper. And it's evident from looking at scripts that, again, a substantial minority don't answer all parts of the question. And maybe that's down to time. So if you're getting to a situation where it's time, you're looking at trying to get this information out a lot quicker. And you're looking to improve your time management. And it's a really basic exam technique. And look, for some of you, this may be your first strategic professional exam that you're taking. For some of you. Others of you may have done SBL already, may have done one of the optional papers already and passed it, and know what it feels like to be in a strategic professional exam where you've only got 3 hours, 15 minutes, and you've got this whacking great big requirement. You've got 100 marks that you've got to plow through. So how do you improve your exam technique? You improve your time management, you improve your exam technique by knowing how long you should be spending on a question. Yeah, by doing questions to time, by rehearsing. How does a 100-meter sprinter know how good they are, how quick they can run? They practice running 100 meters. They practice it. Yeah, marathon runners practice it. They know their timing. All right. It is about doing exam questions at a time. You've got to go into the exam well practiced. You don't do well first time. Look, Spurs, Tottenham Hotspur. Yeah, they've just signed Gareth Bale, haven't they? Back from Real Madrid. He got a run out against West Ham. I watched the game. Didn't look very good, did he? Came on for the last 10 minutes. He wasn't match fit. He wasn't up to speed. Not good enough. Then he played another game and he's finally scored in the Premiership. But I'm saying it took him 2 or 3 games to get up to speed, and you're the same. You can't go into a 3-hour, 15-minute exam if you think that's the first 3-hour exam that you've sat down to do. 2 of my kids are Spurs fans. Actually, I'm more of a Saracens fan. Anybody know what Saracens? Anybody a Saracens fan? Owen Farrell, Billy Vinipola, Mario Itoje, Saracens. That's okay. That's fine. That's fine. It's not a problem. It's rugby union. So my sport, my pleasure is rugby. But football is all pervasive, isn't it? Yeah, all pervasive. I saw overnight that England had a good game, and the young lad from Manchester, was it Foden? Foden played well. Anyway, look, I'm digressing. How do you improve your time management? You practice, and you practice doing exam questions at a time, and you move on. You move on. It's easier to gain the first mark. It's easier to gain the first mark in the next part of the question than it is to squeeze the 7th mark, the 8th mark. Nobody got 8 out of 8, on that environmental thing. But the first few marks of saying something about, well, disclosures are voluntary, there's a bit of a problem there, or why do investors want it? Because they've got that bidding process to go through, and yeah, you get the point. You get the point. Do exam questions at a time. That's what it's about. Yeah, here we are. The exam is a couple of weeks away. All right. You should be, I hope, in a sweet spot. You should be, I hope, yeah, in the middle of revision, coming to the end of your revision and thinking about doing mock exam after mock exam. And ideally, you get them marked. Ideally, you have a tutor, your tutor, who will review your script, give you feedback, give you feed forward, tell you what you did wrong. Yeah, I know. And you probably know what you do wrong as well. But I'm not interested in that culture of scolding. I'm interested in praise and reward, because if you got 45 out of 100 in a mock, that's 45 good things that you did. And you're just so close to getting a few more marks. And how are you going to get those few more marks? And so marking needs to also include positive and signposting how you can improve, how you can do even better next time. Because we're all on a journey. We're all making mistakes. We're all looking to improve. That is what you've signed up for. That is ACCA. Yeah, being professional. Being professional. Right. I think I've got one last little surprise. And this last little surprise is again a sort of a technical issue, technical scenario. So here we go. Here we go. Connect with me on LinkedIn. I mean, if you really want a mock exam, there are services out there. But anyway, look, let's look at this issue. Let me have a go at this issue. I am summarizing, giving a cartoon situation. In an exam scenario, there would be a lot more words around this. But fundamentally, we are a business and we have borrowed money. We have got a loan, which is going to be paid back in 5 years' time. And the loan is interest free. It's a euro loan, which is a currency. And it's from the EU, it's from the Economic Union. And this is where I want the group chat to go ballistic. What are the accounting issues here? What are you thinking about in this scenario? What are you planning for in this scenario? Use the group chat. Exchange difference is being mentioned. Financial instruments are being mentioned. Amortized cost is being mentioned. Yeah, foreign exchange and financial instruments are being mentioned. Yeah, ciao, thank you very much. That's positive. Yeah. Wan, thank you. Foreign currency. Hedging? No, I don't see where hedging is coming in. I wouldn't go for hedging. Wouldn't want to deal with that. ECL, if I'm honest, what is ECL? Don't know what ECL is. Can you explain what ECL is? Maybe I'll work it out. Expected credit losses. Expected credit losses? No marks for expected credit losses. Monetary items. Zhang, no, I don't see that. There's no mention of an investment there. So I'm not involved in hedging at all. Oh, Joe, yes. Fair value, love it. DM, yeah, love it. Government grant, we finally get there. Fantastic. Between us, between you know everything about this. Now, I want to, how long have I got? Another 5 minutes, haven't I? Another 10 minutes, 15 minutes, because I want to have a little bit of time for Q&A. If this is worth 8 marks, I've got to think about how I construct my answer. All right. Now, I'm not showing you a complete answer. I'm showing you bones. I'm showing you plan. And I'm thinking there's a multiple set of issues here. And it's 8 marks. And I'm trying to think that I'd rather break it down. So maybe the first thing to say is, and this is worth maybe 2 marks, financial instruments. Maybe I would say something like that. The company has taken out a loan, full stop. This is a financial instrument, full stop. This must be measured at the present value of this must be measured at fair value, i.e. at the present value of the future cash flow, full stop. Therefore, a gain arises, which is recognized in P&L. Therefore, a gain arises. Do you get the idea? I would love a 5-year interest-free loan. I would love someone to give me 100 million and say, pay me back 100 million in 5 years' time, and in the meantime, pay me no interest. I would be laughing. I would love it. Because I debit cash 100 million, but my obligation is to pay back 100 million in 5 years' time. And the fair value of that is the present value of the future cash flow. The fair value of that is a smaller number. So you debit cash 100, but you're crediting liability 95. You're richer. You're better off. This is a multitude of problems. So we've got to think one problem at a time. And one thing is to say, it's a loan, it's a financial instrument, it's initially recognized at fair value, and therefore because it's interest free, we get a gain arising. And then there's a follow-on point, I think, because we've debited cash 100, we've recognized the liability of 95. Now that 95 needs to breathe and grow over the 5 years. Because you've discounted something, because you've made it smaller because of the time value of money, because you've discounted it, you've made it smaller. As time goes by, you're unwinding that discount. As time goes by, you're unwinding that discount. So there is a finance cost. There is an amortized cost. So whatever the interest rate was that you used to discount the liability, you're adding to the liability every year. So there'll be a finance cost going through P&L, going through the income statement, debit, expense, debit, income statement, debit expense, credit the liability. So the liability will grow 95, 96, 97, 98, back up. And when you pay it back in 5 years' time, the liability is built up again. So I think, again, it's worth a couple of marks explaining amortized cost, unwinding of the discount, finance costs through the P&L. And of course, this is why we add back the finance cost in the P&L, in the cash flow, I should say, in the cash flow. So when you're doing a cash flow question, operating activities, you add back the finance cost is the first thing you do. You add back the depreciation, you add back the finance cost. Then at the bottom, it's interest paid. And in year 2, year 3, 0 interest is paid, but there is a finance cost because of the unwinding of the discount. By the way, last time, in the September exam, I'm not giving away any secrets. Last time, there was a 14 mark, there was a big number crunching question on cash flow. So, just be aware of that fact. Right, what else are we going to say? A lot of you came out with foreign currency, and I love the fact you came out with foreign currency, but not many of you identified that it was a government grant, that was a benefit. There was a benefit. You are happy that you've got an interest-free loan from a government. So the EU may not be your government, may not be my government, but it's a body, and therefore there is a benefit that we've received. And so that gain has to be thought of as whether that loan is to do with whether that's a capital grant or whether that's a revenue grant, and then that is discussed. So identifying that it's a government grant. And then, of course, the foreign currency aspects, because so far as the foreign currency is concerned, this is an individual company stage loan. It's not a sub. So there was no net investment. There was no hedging going on, none of that. Conceptual framework, does it meet the definition of liability? Yeah, you've got an obligation to pay it back. Of course it's a liability. Yes, Oscar, it is a liability. You can mention that if you want, the framework there, but we actually have a very specific accounting standard. It's not a controversial issue. So it is a liability, meets the definition of a liability. And because it's in euros and the exam is in dollars, it's a foreign currency because it's not our functional currency. So the loan as a monetary item, that's been mentioned. The loan as a monetary item, that's been mentioned. And you would retranslate. That at the closing rate, and the exchange difference goes to P&L. Can you see there were no numbers in that? There were no numbers in that. And in many questions, there are no numbers. Sometimes there are. And in explaining it to you, I came up with a number, didn't I? We've received 100 million, 5 years, discount it back, call it 95. If I was teaching you in the first place, I would do numbers to illustrate this point and calculate an exchange difference. But in the exam, often it's about writing and you're identifying the issues. I'm just pausing here for a moment. Zingsar says, is it safe to say that cash flow is not coming up in this diet? Don't know. Maybe I'll tell you that after the exam. I think if cash flow were to come up, and it's on the syllabus, if cash flow were to come up, it probably would come up in conjunction with other issues. So things like, if you're looking at deferred tax or revaluation or impairment, I think you have to acknowledge the fact that there's no cash flow involved. There's no in or out. Or if you're looking at a stakeholder who's concerned about COVID, if you've got a stakeholder who's concerned about COVID, then if you've got a stakeholder who's concerned about COVID, then the issue that arises there is around partly around cash flow, because is it a going concern? To find out it's a going concern, you're interested in cash flow. So I've finished basically, and we are dealing with the Q&As here. So you can ask me anything you want to. Is it advisable to go through P2 papers? Very selectively. Very selectively. Certainly not any of the question ones at all. Not any of the group account questions at all. So nothing in section A really. Some of the questions in section B, but then they're getting a bit out of date, some of them. Should we make reference to the conceptual framework even if the requirement doesn't mention the conceptual framework? In some cases, yes. In some cases, Lee, you can use the conceptual framework to provide the logic to your answer and support your answer and to discuss your answer. So yes, in some cases, but it's not an absolute given. May I know if it is necessary to write out the name of the accounting standard in full? No. Oh, sorry, yes, you may know, but the answer is no. It is perfectly acceptable to say the standard on provisions. The standard on provisions requires all three conditions have to be met. The standard on provisions. You do not need to say it's ISA 37. You do not need to know the full name of the standard. A client doesn't care. I'm interested in what's inside your head, not in your ability to be a parrot. So you do not need to write out the full name of the accounting standard. No way. No way. Is it possible that a question on pensions is tested again? Yes, absolutely. I would say that. Does the ACCA usually recycle questions from past years? The answer to that question is, well, I don't know. I don't think it does. I think the questions you are going to be looking at are going to be original to you. You won't have seen them before. If you get a new client coming into your office tomorrow, if you go and start a new job, I mean, what happens in your world? What happens in your world is different every day. So new clients give you new problems. It's a fresh exam. Kelvin, stick at it. Be reflective. Don't think that the BPP answers are gospel. Don't think the BPP answers are the definitive 100% correct. We are professionals. Don't beat yourself up. Yeah? But what I've tried to do today, I'm aware that the application of accounting standards is one of the most difficult things that students find in the exam. That's why I've been giving you these kind of scenarios where you're having to think which accounting standard is applicable and how you would go around applying your knowledge. That's the tease. That's the sub agenda within this enrichment session, is to concentrate on those accounting standards. A couple of minutes left. What is your advice for last minute revision? Sorry, the September examiner's report, I don't think is going to be published, or the exam is not going to be published anyway. What is your advice? But have a look at the website, have a look at that. That's where it will be. What is your advice for last minute revision? Mock exam, mock exam, mock exam. Questions at time, questions at time, questions at time. Which article is relevant for the coming exam? Don't know. Don't know. But you're right. I like the question because it implies that you understand that articles can be important in the exam. And that if you've read widely around the syllabus, then you can sometimes bring out that knowledge, because sometimes questions seem to be related to a recently published article, or because it's on a current issue, you know, you're having read around it. Yeah, I'm not going to disagree with that. Insurance contract, no, forget about that. Don't worry about that. That's too niche. It's not relevant. Could anything related to COVID be tested? Yes. Yes. I mean, COVID is not an asset. COVID is not an expense. COVID is not a transaction. But the accounting consequences of COVID are enormous. And it's a current issue. And if it's not there in December, it will be there in March. I mean, some aspect of COVID, because it touches on going concern, it touches on government grants, it touches on provisions, it touches on held for sale, it touches on impairment. I mean, is COVID a non-adjusting event? Well, you know, that's a discussion point, isn't it? What is the context that we're talking about? If you're running a business and COVID has meant that your business has been closed and you're trying to work out your stock valuation, you value stock at the lower cost and net realizable value. If you're now closed and you can't sell your stock and you have to throw away your stock, then the determination of the net realizable value effectively takes into account what you would expect to sell it for. So to that context, yes, it's an adjusting event. But if you decide to sell your assets after the year end because COVID happened, it's a non-adjusting event. But if you're no longer a going concern, it's an adjusting event. So I don't think there is a simple, straightforward answer. Is COVID a non-adjusting event? I think you have to understand the accounting implications of COVID in the very specific situation. Determining net realizable value of stock, yeah, what's happening? It's adjusting. If you decide after the year end because of COVID to sell the business, it's not held for sale because the conditions have to exist at the year end. So it's standard by standard basis. Tansy Kent, yeah, I mean, you know, there's a little one out on deferred tax, isn't there, to do with leases, and I've written an article on that myself, which is on LinkedIn. So if you go on my LinkedIn profile and you look at my articles, there's a very short article there explaining around the deferred tax implications, or the exposure draft, clarifying the deferred tax implications on leases, whatever. Lam is asking, do we need to know the details of IFRS SME? Well, it's on the syllabus. That's what I would say. It's on the syllabus. Yeah, they have got some recent revision notes there. Crowdfunding. That's an issue again. Yeah, crowdfunding. Yeah, I'm not going to disagree with you. You could argue it's not on the syllabus, but it is. And actually, there's no point in having a discussion. There's been an article on crowdfunding. I've done some stuff on crowdfunding. You can find that on LinkedIn. I love related party transactions, Beatrice. I love it. I just love it. It's something that crops up like a shark. You know, you don't know it's there, and whoa, you know, as we saw with the loan guarantee with the director. No, Michelle, no. No, don't discuss pandemic implications if the question doesn't ask about it. No, I wouldn't, you know, don't make life more. Answer the question. I refer you to my slide earlier. Answer the question. Don't go into the exam thinking it's about the pandemic and therefore I write about the pandemic. It's like you've got to have the question suggest to you that there is a issue around public health, there is an issue around COVID, and then he's framing the question in that way. Right. I think my time is coming to an end, and I have massively enjoyed this experience, and I appreciate your attendance, and I'm going to hand you back to the good people at ACCA so that they can say goodbye to you and have the necessary closure. I'm glad you enjoyed it. I thank you for thanking me. I'm glad you enjoyed it. Yeah. If there's a feedback form, if ACCA send you a feedback form, please complete that, because they are putting these things on for your benefit. If you've benefited from it, let them know that you've benefited from it. Yeah. And if you think something could be done differently, let them know. They are there to help you. I'm here to help you. So I do appreciate your appreciation. I thank you very much for coming along and giving up your time. And yes, please, everybody, stay safe. Yeah, stay safe. Be positive in your attitude, but be negative in your tests.
Thank you so much, Tom, for conducting these wonderful SBR sessions. I believe that we enjoy it, the companion of our engaging students, aka the keyboard warriors. So while for the students who attend these sessions, thank you for your participation today. Hopefully you have gained more insights on how to approach your SBR exam effectively. And these sessions are recorded, where we will be sending it out with an email of the details of how you can listen to it again. Last but not least, we wish you all the best in your upcoming exam sessions in December. Stay safe and take care, everyone. Bye-bye.
Thank you. Bye-bye.
Thank you. Take care. Bye-bye, everyone, as well.